this is how tax write-offs work for a CRNA who chooses to work 1099, or really any person who chooses to work 1099 for that matter. And yes, I am in my bathtub. There is a thunderstorm outside, and I am the designated Thunder Buddy of Buddy Massaro. Okay, so let's talk about 1099. What does that even mean? This is a tax designation for how an independent contractor gets paid. So when you are a CRNA who chooses to work 1099, you are contracting out your anesthesia services to a hospital, an anesthesia group, a GI clinic, a surgery center, so on. You are not an employee of that facility, meaning they are not providing you with benefits. They are not giving you health insurance, for example, vacation time, for example, but you typically negotiate the hours that you want to work. You negotiate your hourly rate. You negotiate the duration of the contract period, and typically you're able to get a much higher hourly rate than what an employee would get. The benefit of this is you can typically save a lot in taxes compared to someone who works W-2, meaning that person, the W-2 person, is a full-time employee or even a part-time employee collecting benefits from an employer like a hospital or anesthesia group. When you are a 1099 contractor, in the eyes of the IRS, because you are contracting out your services, you are essentially functioning as a small business. You're functioning as a small business owner, with you yourself being the entire operation of your business. Therefore, when you run a business, there are a lot of costs associated with running that business. Now, think about it this way. Think about Confident Care Academy, the education business that I co-founded with Anna and that I run. And I promise this is all going to connect to the 1099 taxes. It's going to make sense in a second. When we run our business, we have revenue and we have profit. Revenue is the money that flows into the business, and profit is how much we actually make after accounting for all of our expenses. Now, at the end of the year, when we file our taxes, when we file our Schedule C on our business income, the IRS doesn't tax us on our revenue, right? Because that wouldn't be very fair. In fact, last year we made $500,000 in revenue. We crossed the $500,000 threshold. That was a really big win for us. However, we spent the majority of that on our team. So hiring our own 1099 independent contractors, on so many subscriptions to Canva, to Shutterstock, to BioRender, to the Circle platform where we host our membership through, right? All these subscriptions and services, to video editors, to a social media manager. Shout out to Mila, love you, Mila. We spent most of our money. So it would be extremely burdensome for the IRS to tax us on $500,000 when really our profit at the end of the day was a fraction of that money, because again, we spent most of it on business expenses, meetups at ANA and NTI, running our booths at these things, right? All these things cost a lot of money. So in the same exact way that we only pay taxes on the money left over after all of our expenses, the IRS extends the same courtesy to 1099 contractors. So what are some common expenses associated with being a CRNA? Well, continuing education is one of them, right? To maintain your license as a CRNA, right? So you can write off conference fees, the travel, the flight, the hotel, the meals accumulated while you're there. All of that can come off of the top of your income to reduce your taxable income, right? Your stethoscope, your sneakers for the OR, your scrub hats, all of these things are part of your essential tools for practicing and your uniform. You can write off the mileage associated with going to and from work. You need transportation to arrive there. Oh my God, TikTok always keeps cutting me off. You can write off a portion of your grocery money because you need to eat meals while you are at work as a CRNA, right? So all of these things are seen as expenses, part of the cost of doing business as a CRNA. So you write off all of these things against your total income, and you pay taxes on the remainder of the income after you complete all of these write-offs. Typically, if you have the help of a very good tax planner, tax advisor, CPA who's going to help you with this, you can often pay a much lower effective tax rate than a CRNA who makes the same amount of money who is working full-time for benefits. Now, you have to do the math on what makes the most sense for you, because there are some negatives associated with 1099 income. Typically, there is less job stability associated with this. So people who have families, multiple children, a lot of times don't opt for this for their full-time income unless they have a spouse who has some sort of more stable security. Again, you're not provided with benefits. So paying for health insurance for one person is one thing. Paying health insurance for a family of 4 is another. That can get very expensive. So sometimes you actually come out ahead if you're providing for multiple people as a head of household as a W-2 earner. Not always the case though. It depends on the area you live, depends on the contracts that are available to you, depends on the type of work that you like to do, depends on how hard you want to work and how many hours you want to work. So you have to do the math on what's most important to you for lifestyle, job security, flexibility, how important it is for you to have certain benefits provided to you, and kind of go from there.